Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today we're talking about how to find great commercial property deals. So if you've come from the residential investing world, then the way you find commercial deals varies in some ways, but also does differ quite largely in others, and I'm going to explain why that is. So the way the market runs is that there are commercial agents, both national and local, and they really do, probably saying control the market is probably a bit too much, but there aren't loads of them. So in one market, you may have 3 or 4, or maybe even less commercial agents in that market who have a monopoly really over most of the product in that particular location. And they are, because it's a relatively small market, there's a lot less commercial property than there is residential property in towns and cities. They have a really great knowledge of the property in that particular location. So especially in some of the bigger practices where, they might specialize in retail warehousing or offices or, flex space industrial or logistics or whatever else. And obviously they really do understand that market. And again, because there's not a load of it in particular locations, they really do know it. They know the owners, they know the tenants, they know what the tenant demand is. So commercial agents are your best friend. But I get feedback all the time from clients that they really struggle with commercial agents. And obviously that's a sweeping statement. There are some amazing commercial agents. I mean, I've been a commercial agent in my time. There's some incredibly friendly commercial agents, incredibly helpful commercial agents. But one thing is true, and it's the same for residential agents as well, is they're fee driven. So if they think you're a time waster, if they think you're not credible, then they're not really going to give you very much time. In fact, they may not even call you back. And I'm sure some of you experience that. So the key thing with commercial agents is really to build your credibility with them. And so that's why I say to clients, on your first call with a commercial agent, do some research. It's generally better to call about a property rather than just generic about, I'm looking for property of this kind of thing. It's better to kind of hang your hat on a property. If you've bought a property with commercial agents, your credibility is through the roof. But if you haven't, then you need to make sure that they understand who you are, what you want, where you're going. And of course, that credibility can be built in several ways. So if you're an experienced commercial investor, if you've bought in the location already, or if you're a cash buyer, it's going to be easier to build credibility than perhaps if you've never invested in commercial before, and you don't really know what you want. But you can, even if you've got residential investments but no commercial, you can say things like, I'm an experienced investor. I'm looking for commercial of this kind of size and price in this kind of location. I'd love to work with you on it. And, I'm a cash buyer or whatever else it might be. Also, don't give yourself away by not talking the lingo. Just really simple stuff can really give you away as a bit of a newbie. So, for example, if I'm calling a commercial agent and I'm saying, is the lease inside the 54 Act? they'll know that I know what I'm talking about. It's a bit of the insider lingo. If you call up and say, "Oh, is it inside the Landlord and Tenant Act, 1954?" then they'll think, "Newbie, you spot it from a mile off." So this is why some knowledge is really, really helpful before you talk to commercial agents. So the first piece with commercial agents is build your credibility with them in whatever way you possibly can do. And then you must make sure that you build trust with them. You build rapport, obviously. So, you get on well with them, do a viewing, eventually get to the point of taking them out for drinks, but ultimately you want to build trust with them. So if you're going to view, don't cancel at the last minute. If you're going to put an offer out, put an offer out. If you're not going to put an offer out, call them and explain why. If you put a cheeky offer out, call them and explain why you're putting a cheeky offer out and say, "Look, I hope you understand, love to keep in touch on this." If you don't get a deal, follow up, diarize a follow up, because that is one of the most underrated ways of getting hold of commercial property deals. So make sure you factor in some follow up, diarize it, get your VA to diarize it for you, whatever the best process is. Put it on Trello, put it on Asana, whatever it might be. Just make sure you follow up, because you'll be one of nobody else will be doing it, basically. So make sure you're the only one who follows up, because that's going to improve your credibility with commercial agents. And if you're following up, has that deal gone through yet? Oh, it's still in solicitor's hand. Well, listen, keep me posted, because I'm there for it. If I know I put this offer out, I can look at my offer again if it falls through. Oh, and by the way, do you have anything similar? Anything you're offering off market? It's a great way to keep in touch with commercial agents and build relationships. So commercial is a very relationship driven business. Now, a big chunk of commercial deals are done off market. And this is where we differ massively from the residential world, because a lot of deals are of course done off market in the residential world, but a huge chunk of deals are done off market in the commercial world. So I would say probably there's a bit of a north-south divide on this. I think that some in some northern areas, more stuff goes on the market, potentially because there's less demand for it. But I would say somewhere between 50 and 70% of commercial property, as a general rule, especially down south, doesn't even hit the market. So if you're looking at some of the portals, and I'll talk to you about those in a minute, if you're looking at some of the portals and you're like, golly, there literally is nothing on the market. There's one or two industrial properties, a couple of retail properties, and that's about it. And they're all priced on application. Then that's because deals are being done off market. What commercial agents will do is that they have a little black book. So they have a little black book of investors they know, like, and trust, who've bought property before, probably, or at the very least have kind of come close. And they will be, a lot of, especially in a falling market, a lot of vendors don't want to put a property on the market at a lower price. They want to attract cash buyers, because commercial agents have this little black book of investors. Sometimes you don't need to go on the market. So they will actually offer these properties out to their list beforehand. And obviously there's an A and a B and a C list of people that they know will be up for this kind of kit. They will tailor the product to the investor. But a lot of deals are done off market. So if you use tools like Property Filter, for example, if you use tools like Searchland, Nimbus, CoStar, what they can do is give you really valuable information to call commercial agents with maybe the history of the property that's on the market, or comparable evidence, or whatever else it might be, so that when you call a commercial agent, automatically your credibility is higher, and therefore you're more likely to get off-market deals. And your spiel could go something like this, I'm calling about such and such a property. I see that it's on the market for this. I've done a bit of research. It looks like the yield's around this. What do you think? Don't call cold. Say, what's the yield? What's the rent? What's the lease terms? You want to have done some research. That's where this prop tech really, really kind of holds its own. And then you'll say off the back of it, is it possible to do a viewing? Have you got any interest in it? How did you get to the price? Why is the vendor selling? You can ask all these important questions, and then you can arrange a viewing, and then you can ask, do you have anything similar to this, or do you have any other commercial property available? Would you mind adding me to your off-market list, because I'm really keen to buy, and definitely at the moment, if you're a cash buyer, then you're going to get ahead of the queue. So if you possibly can be a cash buyer, get investor finance, JV finance, refinance any properties you've got, or just use your own cash, use your pension perhaps, then you are definitely going to get ahead of the list. So cash is king at the moment. That's for, or queen, that's for sure. So commercial agents can be your best friend, or they can be your worst nightmare. So make sure that you approach those relationships carefully. And you know what? If you don't want to, if you're new to this and you don't want to kind of, if you haven't prepped properly and you want to practice, then maybe practice on commercial agents outside of the area you want to invest in. Who knows, you may find some amazing deals, but equally you practice your spiel, you practice your pitch, and you get good at it without kind of, because sometimes you get one hit at these kind of relationships. So commercial agents, number one, is a really fantastic way of finding deals. And what I found in the market right at this moment in time, and this is being recorded as of the end of April 2025, is that we are in a buyer's market right now. There's a lot of kit on going on the market at price on application because they don't want to realise lower prices, and there's a lot of motivation amongst vendors. And as we all know, to get the best deals, you need to identify motivation. So you can identify motivation through agents, or you can approach vendors off market. So this is a perfect market for our second way of finding commercial property, which is direct to vendor sourcing. So direct to vendor is basically where you identify a certain type of property in a certain location. I would recommend that you think about your niche first, and there's been a previous podcast on that. You think about your niche first before you do that, because you can spend a lot of money on sending direct to vendor letters. You can get a VA to do some data scraping for you, and then you can send letters out, and tech like Searchland is linked into Stamped, for example, so you can send out letters direct. What's very effective, especially in the current market, is identifying motivation. So you can maybe identify people that are coming up for refinance. You can find charges on company's house. You can do some local investigation. You can find out information on the prop tech. Maybe there's a lot of commercial finance got taken out in 2019 on 5-year loans. So that's come to fruition around now. So there's potential now to kind of meet that motivation. Motivation can be people have owned property for a very long time. Maybe they want to retire. Maybe they're ill. Maybe their family are taking part. Those life events which make motivation much more compelling. So again, you could maybe target properties where owners have owned over 20 years, might be turning into tired landlords. You could find properties that are vacant, because obviously if they're vacant and there's no sign of being let, then landlords are automatically going to be more it's going to be more desirable to sell. Basically, they're going to be more motivated. Obviously, you need to make sure that you know what to do with that, whether that's repurposing or splitting it up or whatever else. You could target owner occupiers who perhaps want to recapitalize their business, and you could find that out through property owners, through the land reg, etc. So, and that's just the tip of the iceberg. You need to think about how you can identify motivation. For example, with finance coming up, loan to values are lower, rates are higher, and values have dropped in a lot of sectors since 2019. So there'll be more motivation, but perhaps they can't even refinance their assets, and therefore there will be more motivation. So identify motivation. Direct to vendor letters are a great way of doing that. Got lots and lots of clients that have identified deals through direct to vendor sourcing, and they've managed to do creative deals like exchange delay completion, options, vendor finance. Because obviously if you've not got a commercial agent involved, then you can perhaps be a bit more creative. You can be creative with commercial agents, but they do want to get their fees. So make sure you never, ever cut a commercial agent out if they're involved, because they will never send you a deal again. So it's going to be your long-term loss if that's the case. So definitely direct to vendor sourcing. Now, of course, you can find properties that are available on the market. So some of the main portals include LoopNet, Property Link Estates Gazette, Rightmove commercial, Zoopla commercial. There are others as well. And there are plenty of decent deals on market, actually. And by using tech like Property Filter, you can work out how long they've been on the market for, whether they've had price reductions. And obviously that gives you the insider track on looking at whether there might be a deal to do, kind of identifying motivation. So you can definitely do that. Make sure you get alerts sent to you. And a little top tip, if you're getting alerts sent to you, maybe set up a separate email address so that you can have them in one inbox. And then what you can do is you can make sure you carve out time every week to stack deals, to do viewings. This is just a very simple case of diary management. So making sure that you prioritize, because at the end of the day, sourcing is one of those important, not urgent tasks that will get left on the back burner if you don't prioritize it. So make sure you're blocking time out in your diary to do that, and make sure that you kind of prioritize what you need to do, because it is very, very important. And without your pipeline, obviously you're not going to be able to acquire assets going forwards.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So we've talked about the portals. Now let's talk about auctions. So I've got clients who are doing amazing deals post-auction. Sometimes they get a little bit heated in an auction room. And there's obviously different strategies you can employ with auction. And there are some really interesting deals in auction. So a few ways of identifying commercial deals where perhaps there might not be a room full of buyers. So one is finding commercial deals that have maybe ended up in the wrong auction. So that might be whether it's ended up in a residential auction. You see that from time to time. Or maybe an auction where it's out of patch. So, there's a property in Leicester and it's ended up in some auction in Newcastle. Nobody's quite sure why. Maybe that's where the owner lives or something. But actually, there's probably not as many people there to buy the property at that point. When you're looking at auction, make sure you look at special conditions. Ideally, get the legal pack looked at by a lawyer as well, so that you understand it. And make sure you set your limit. Make sure that you that you absolutely understand where your limit is. And sometimes, especially at the moment, where vendors are just trying their arm at auctions, then you might be able to pick some great deals up post-auction. So in last week's podcast, Nilesh was talking about picking up his deal in Chichester in auction. Amazing deal. The vendor was very entrenched at $750, but Nilesh managed to pick it up for $700 because he just held firm after the auction. And the vendor was super motivated because he wanted to avoid what he thought was going to be an increase in capital gains tax in the budget. And so therefore, he wanted to avoid that and wanted to get a deal done quickly. So again, vendor's motivation. So auctions, and obviously you can underwrite in auctions before it happens. You can work with people. I really like working with Hammered Auctions who know the auctioneers, will understand the valuation for auctions, etc. And auctions increasingly are becoming a great way of finding commercial stock. And you can see, and even the blue chips, even pension funds are putting stock in auctions at the moment. So secondary offices, you're seeing a lot of secondary offices in auctions at the moment. Secondary retail, shopping centres are going into auctions. So definitely using packages like EIG auctions is a really great way of sourcing. Another great way is building relationships locally. So if you identify your niche and you spend time on patch, and by the way, I would absolutely advocate that you go out, get in the car, get into your patch and really understand it. We all try and be keyboard warriors these days, but actually to actually get out on patch and actually understand how the market works, go at different times of the week, understand, vacancy rates, footfall, dwell time, all that kind of good stuff that really gets you under the skin of commercial property. And if you can do that, then, and also just talking to local people. I've got some clients who are ex-board members, and they literally, wherever they go, they strike up conversation, the local pub, the local newsagent, and without fail, they come back with a deal. It's uncanny how they do it, but it's just building relationships. It's using local networks, going to local networking meetings, and identifying motivation, portfolio landlords who are trying to exit. There's all kinds of motivations that you can identify, but building those networks locally, local networking meetings, speaking to local people, local commercial agents, obviously, can be a really, really great way of finding deals. And obviously, you can also look at boards on the property. You can understand properties that are vacant. If there's a board on a property and it's derelict and there's no tenant, then, there's probably some good motivation from that particular landlord. You can send a direct to vendor letter, but get on with it. The amount of times I've driven past the same commercial property and thought, I really must send a letter about that. And then literally the week I decide to do it, a tenant sign says coming soon, and they've let it. So it's really important to to strike while the iron is hot with those kind of properties as well, and recognize where there's motivation. And really the resounding message to give you today is you really do need to try and identify motivation and take advantage of it, build relationships. Even if you send direct to vendor letters out, you can follow up. Make sure you're the only people that follow up. Everybody else will have forgotten about it long before you give up. Differentiate your letter with direct to vendors. I heard of somebody who sent a tea bag because they said, here's a tea bag for you to have a cup of tea with me to talk about your property. I guarantee that direct to vendor letter probably had received at least half a dozen other letters, but one they definitely remember. So loads of different ways to source commercial property, and identifying motivation is super key. And just a little word about the market really is that we are in a buyer's market at the moment. And so there is a lot of motivation out there. There's also a lot of sentiment shift. So with Trump's tariffs and with budget and with the economy and, interest rates maybe not shifting as quickly as everyone hoped, then vendors, I think there's a lot of vendors out there who are looking to do deals off market, either through agents or direct with purchasers. They're motivated because they just think they want to get out before the market worsens. There's that kind of sentiment feel about it. I don't know how long that's going to last. It may be that we slide further, or it may be that actually this is a moment in time. But whatever happens, now is a fantastic time to buy commercial property. Just make sure you've got some knowledge so you don't make mistakes. And I suppose the last message I want to leave you with is absolutely ignore asking prices. An asking price is an asking price. It is not the price of the property. So don't think you've got a great deal if you've got 50k off asking price, because that absolutely is not the case. An asking price is an aspiration from a vendor and an agent. What you need to do is you need to work out exactly what it's worth to you, working out your multiple exits and working out kind of what you're going to do with that property to add value. And you offer what you can afford, especially in this market. You might want to nibble that offer slightly to cater for perhaps the market we're going into. You might want to get creative and put multiple offers out, and exercise a bit of creativity in your deal creation. But basically, you need to make sure that you ignore asking prices, because at the moment, asking prices, as far as I can see, they bear no semblance to reality in terms of actually what commercial property is worth. So just a bit of a top tip for you to leave you with there. So loads of different ways you can source commercial property, but I think, if you want to make the most impact, the quickest, build rapport with commercial agents. Don't leave those relationships, follow up regularly, and make sure you get those off-market deals.